starting from comparing cryptocurrency to venereal disease to transmitting a grave warning that all of us are in a bubble. Charlie Munger has made us stand on our feet with his shocking predictions that do have an iota of truth in them. Oh, his harsh criticisms are sure to stupefy you. His estimates generally have a reputation of being mostly correct, so what warning does he want us to be aware of? Let's find out. What shocking warnings Charlie Munger has to give to the investors at large.
You mentioned we're in a big bubble. Can you elaborate on that, and how is this likely to play out?
When you print money on the scale that modern nations are printing it, Japan, the United States, Europe, etc., we're getting into new territory in terms of size. There's never been anything quite like what we're doing now, and we do know from what's happened in other nations, if you try and print too much money, it eventually causes terrible trouble. And we're closer to terrible trouble than we've been in the past, but it may still be a long way off. I certainly hope so. When Volcker, after the 70s, took the prime rate to 20% and the government was paying 15% on its government bonds, that was a horrible recession. Lasted a long time, caused a lot of agony. And I certainly hope we're not going there again. I think the conditions that allowed Volcker to do that without an interference from the politicians were very unusual. And I think in 2020 hindsight, it was a good thing that he did it. I would not predict that our modern politicians will be as willing to permit a new Volcker to get that tough with the economy and bring on that kind of a recession. So I think the new troubles are likely to be different from the old troubles. You may wish you had a Volcker-style recession instead of what you're going to get. The troubles that come to us could be worse than what Volcker was dealing with and harder to fix. Think of all the Latin American countries that print too much money. They get strongmen and so forth. That's what Plato said happened in the early Greek city-state democracies. One person, one vote, a lot of equality, and you get demagogues, and the demagogues lather up the population, and pretty soon you don't have your democracy anymore. I don't think that was a crazy idea on Plato's part. I think that accurately described what happened in Greece way back then, and it's happened again and again and again in Latin America. We don't want to go there. At least I don't. We've done something pretty extreme, and we don't know how bad the troubles will be, whether we're going to be like Japan or something a lot worse. And what makes life interesting is we don't know how it's going to work out. I think we do know we're flirting with serious trouble. I think we also know that some of our earlier fears were overblown. Japan is still existing as a civilized nation, in spite of unbelievable excess by all former standards in terms of money printing. Think of how seductive it is. You have a bunch of interest-bearing debts, and you pay them off with checking accounts, which you're no longer paying interest. Think of how seductive that is for a bunch of legislators. You get rid of the interest payments and the money supply goes up. It seems like heaven. And of course, when things get that seductive, they're likely to be overused. If you stop to think about it, my way in life was not predicting little short-term differences between the Russell Index and the Standard & Poor's Index. I don't have any opinion about which index is better at any given time. I never even think about it. I'm always just looking for something that's good enough to put Munger money in, or Berkshire money in, or Daily Journal money in. And I figure that I want to swim as well as I can against the tides. I'm not trying to predict the tides.
It seems that Munger has busied himself into ringing the warning knell of inflation in the market. Oh, did we say how he is shaking the world at large by his dreadful speculation related to the cryptocurrency market? While speaking about Bitcoin at the annual meeting of Daily Journal Corp, he had made a powerful statement. "I'm proud of the fact I've avoided it. It's like some venereal disease." In the wake of the tremendous popularization of investing in cryptocurrency, this warning posed by Munger has come as a real shock among investors located all over the world. The chairman of Buffett's Berkshire Hathaway just went on to say the rudest views about cryptocurrency, and he said that he wished it just had got prohibited from the very beginning. He moves ahead to comment on crypto saying, "I just regard it as beneath contempt. Some people think it's modern tea, and they welcome a currency that's so useful in extortions and kidnappings and tax evasion." Munger features a vast treasure house of knowledge about the investment of all sorts. He has great conviction in the fact that the most crucial metric that you need to look at when valuing a business is its cash flow. While giving his own viewpoint, he had said, "We tend to prefer the business which drowns in cash. It just makes so much money that one of the main characteristics of it is the amount of cash coming in. There are other businesses, like the construction equipment business that my old friend John Anderson ran. He used to say, you work hard all year, and at the end of the year, there's your profit sitting in the yard. There was never any cash, just more used construction equipment. We tend to hate businesses like that." Thanks to Munger, you will come across some cool investment hacks. Coming to the hot topic of investing in China, do you know what Munger had said? He had emphasized that the extremely high population in China and its great technological development as important factors for investing. He believes that these are the very reasons for which he had invested in China because, well, he was sure to get great value from this investing venture. When asked about the risks associated with the Chinese firm Alibaba Group in an interview, he said, "We don't mind a tiny little bit of margin debt." Both Munger and Buffett believed that Chinese companies have a more robust foundation as compared to that of their US counterparts. Unconventional advice coupled with financial foresight is what makes Munger's advice stand apart, and maybe that's his superpower. He doesn't align his interests to mainstream investment schools of thought and doesn't rush into taking part in the hot, trendy activities. Not to mention his witty tactics, which are sure to surprise you. He doesn't think the way we do. In fact, his assumptions and strategies have been proved to be right in most cases. Investing in stocks for the long term, a good choice or not? What's Munger's take on this?
If you're going to invest in stocks for the long term or real estate, of course there are going to be periods when there's a lot of agony and other periods when there's a boom. And I think you just have to learn to live through them. And as Kipling said, treat those two imposters just the same. You have to deal with daylight and night. Does that bother you very much? No. Sometimes it's night and sometimes it's daylight. Sometimes it's a boom, sometimes it's a bust. I believe in doing as well as you can and keep going as long as they let you. I've always believed that nothing was worth an infinite price. Even an admirable place like Costco could get to a price where you would say that's too high. But I would argue that if I were investing money for some sovereign wealth fund or some pension fund, and a 30, 40, 50-year time horizon, I would buy Costco at the current price. I think it's that strong an enterprise and that admirable a place.
Munger's golden piece of advice on long-term investment has been, if you're going to invest in stocks for the long term, or real estate of course, there are going to be periods when there's a lot of agony and other periods when there's a boom. I think you just have to learn to live through them. As Kipling said, treat those two imposters just the same. You have to deal with daylight and night. Does that bother you very much? No. Sometimes it's night and sometimes it's daylight. Sometimes there's a boom and sometimes there's a bust. I believe in doing as well as you can and keep going as long as they let you. I've always believed that nothing was worth an infinite price. Even an admirable place like Costco could get to a price where you would say, that's too high. But I would argue that if I were investing money for some sovereign wealth fund or some pension fund with a 30, 40, 50-year time horizon, I would buy Costco at the current price. I think it's that strong an enterprise and that admirable a place. Munger is actually very worried about the future. It would be a wise decision to follow his advice because he is the king of investment for a reason after all. Munger has warned that there are lots of troubles coming because of too much wretched excess. And do you know where this excess comes? Well, this stems from EBITDA, which stands for earnings before interest, taxes, depreciation, and amortization. He went on to say, I don't like it when investment bankers talk about EBITDA, which I call bull's earnings. Think of the basic intellectual dishonesty that comes when you start talking about adjusted EBITDA. You're almost announcing you're a flake. According to him, investors nowadays tend to take excessive risks, and for this, he blames China to be a problem. And he said, in China, they love to gamble in stocks. This is really stupid. The man of wisdom even continued to say, I do think that my generation had the best of all this technological change. I don't think we're gonna get as much improvement in the future because we've gotten so much already. What is the index fund bubble?
Investing had on stock valuations?
Oh, huge. That's another thing that's coming. We have a new bunch of emperors, and they're the people who vote the shares in the index funds. Maybe we can make Larry Fink and the people at Vanguard Pope. All of a sudden, we've had this enormous transfer of voting power to these passive index funds. That is going to change the world. And I don't know what the consequences are going to be, but I predict it will not.
When Munger was asked what impact has passive investing had on stock valuations, he had replied to it saying, "Oh, huge! That's another thing that's coming. We have a new bunch of emperors, and they are the people who vote for the shares in the index fund. Maybe we can make Larry Fink, CEO of BlackRock, and the people at Vanguard Pope." All of a sudden, we've had this enormous transfer of voting power to these passive index funds. That is going to change the world, and I don't know what the consequences are going to be, but I predict it will not be good. We have a hugely strong economy and a hugely strong technical civilization, and that's not going away, and the knowledge and so forth. What's next? The area of investment is highly technical, and it consists of a great deal of analysis, strategy making, and witty decision making. So pay heed to Munger's warning, because he is mostly right in these cases, and if you wish to direct yourself towards the right path, your time spent watching this video has been made worthwhile. Did you find this video informative or helpful? Let us know in the comment section below. Make sure to subscribe so you don't miss out on my future videos. And of course, don't forget to drop a like and share it with all of your friends. See you in the next video.